webinar series. My name is Tony Zhang. I'm the Chief Strategist here at OptionsPlay, and we are back. I am really happy to be back, to be doing these live market analysis sessions again. I hope that everyone is doing well here today. And we're going to give an overview of what we have seen in terms of changes in the Nordic equity markets. We'll talk a little bit also about commodities and currencies and just how they affect our views overall of the general markets. But before we get started, what we are going to discuss here today is purely for education and demonstration purposes. It is not a solicitation or recommendation to buy or sell any of the specific securities that we are going to discuss during today's session. So we'll start off with a brief Nordic market overview. We'll take a look at the major market equity markets. Taking a look at the major equity markets, we'll note some of the changes we've seen in terms of trend, specifically which of the four Nordic markets is starting to see some downside risks, and what that potentially could mean for the broader Nordic markets. We'll take a look at also commodities and currencies, because those do have an influence on the equity markets here as well, specifically oil prices in some of the Nordic markets. And we'll take a look at economic indicators. We'll show you some of our trade ideas, and most importantly, show you how to paper trade these trades, and then we'll open this up for Q&A here at the very end. But the primary thing that I want to help everyone walk away from today's session is an understanding as to, are equity markets at risk of a pullback? In order to answer that question, I want to take a look at some of the charts, technical analysis, as well as some of the economics to help inform our decisions, as well as taking a look at some of the options trades that we can make to potentially protect ourselves against some downside. So before I get started, I just want to do a quick poll here. How many of you, if you could please bring up your chat window, how many of you are concerned about a pullback here in the equity markets? Either type yes or no into the chat window. How many of you are concerned about a pullback? Type yes if you are, and type no if you are not concerned and you think equity markets will continue to move higher. Okay, so I see a lot of yeses. I see one no out of all of these responses. So many of you are concerned. And I think those concerns are valid, because if you look at the equity markets, we've had a very long uptrend here in the equity markets. And so far that uptrend largely has been broken. Not only has the downtrend been broken, we've now retested that trend line and we've been rejected off of that. Now that in itself is not a bearish sign. This is simply more of a pause, meaning this is a pause in the long-term bullish trend. We've now traded sideways. And the question is whether this trend will continue or this trend will break lower. And right now we don't have enough evidence to confirm one way or another, but what we have confirmed is that the downtrend is no longer continuing higher. This is the daily chart on the right-hand side. As you can see, the markets have largely been consolidating since March of this year. We've made a prior high, and this prior high was not exceeded again. So that shows us that we are now in a neutral trend. So when we're in this neutral trend, my expectation is that at the very minimum, we'll likely retest this next support level. And we very well might bounce off this level and continue to trade in this range before markets either break out higher or break down lower. So these are some of the key levels that we have to pay attention to. So OMX S30, this is the 2240 level. These are the levels that we want to target here to the downside in the short run, and then watch for a break. If it breaks lower, then this strong uptrend that we've been in for the last 2 years or so is at risk of a bigger pullback. So for those of you that are concerned, I think the concerns are valid, but we don't have evidence that things are going to start moving here to the downside just yet, at least when we look at Stockholm. We have virtually the same picture when we look at Copenhagen. If you look at the Copenhagen market, OMX C25, exact same long-term uptrend. You have the long-term chart here on the left-hand side. We've been consolidating for the better half of this particular year. The Copenhagen market is mostly trading in a sideways range, ranging between 1820 and 2020, so about a $200 range. The next target here to the downside is that 1820 level here. This very well could remain range-bound and break out higher eventually, but until that happens, our views is make sure that you watch these levels. If it breaks below 1820, this is very likely headed down to somewhere around the 1700 level, which is the next support level here to the downside. So those are some key levels to pay attention to for the Nordic markets. If we look at Helsinki, Helsinki is noticeably weaker than the Swedish markets. Notice how the recent highs here, we've got nowhere near those recent highs on the recent bounce. So again, Helsinki likely to revisit down to that 5250 level here and at risk of a pullback here, putting this long-term uptrend at risk of a potential pullback here. So we largely see roughly the same views and same charts on all of these markets, with the exception of Oslo. Now, Oslo has been stronger because over the past 6 or 7 months, as the other equity markets have been trading sideways, the Norwegian markets have continued to show strength. And this is on the back of oil prices. We're going to take a look at that here as well. But when we look at Oslo, Oslo was very slow off the start in terms of the pandemic, and then took off substantially, outperforming the other Nordic markets. And in the most recent past, significantly outperforming those markets. But recently, we've started to see some major underperformance here. The Norwegian markets, especially as oil prices have started to soften, we've started to see this at risk. And for those of you that have a keen eye, especially for those of you that like to use the charts, you might notice that this might look like a bit of a head and shoulders formation. And if you have the head and shoulders formation, we could be targeting as low as 980 here to the downside, that neckline. So Oslo currently at risk of completing a topping formation and seeing some downside. So when we look across the the Nordic markets, you have a lot of pause, a lot of neutrality, not a lot of upside, and some significant risks of the downside if we break below those levels that I referred to here today. And I just want to take a look at crude. Crude recently broke out above the $75 level on the back of what looked like really strong demand on the back of really low supply. OPEC not pumping a lot of oil, hoping to keep supply constrained, knowing that demand was going to pick up, and we saw that breakout here above 75. We haven't seen oil prices above 75 for multiple years. And now, with the Omicron variant of the COVID, we've seen a significant decline here in terms of oil prices. We actually now expect perhaps supply to outstrip demand going forward. So this is really what's weighing on the Norwegian equity markets here as well. This downside here in oil, this significant downtrend here in oil does put further pressure here in the Norwegian markets. And as you can see, my expectation is that oil may very likely revisit 66 and as low as perhaps 62 here to the downside at the moment. So oil putting a bit of a pressure here on Norwegian markets. The other thing we want to take a look at here are government yields. The Swedish 10-year yields are back towards 10 basis points. So, this is going to be the Swedish markets are, there's quite a bit of banks in those indices. So you want to make sure that you understand that yields right now at very low are going to be a headwind for the banks, but it is going to be also a headwind for the currency here as well. And we've seen the dollar crown, USD SEK suffer quite a bit here. The Swedish crown weakening here recently. We've had this bottoming formation, I would say, of the dollar crown, and the major level that I think we really have to pay attention to right now is this 915, 910 level here. This was a recent support and resistance for multiple years. And as you can see right now, we are testing this. So as the dollar interest rates continue to rise and Swedish interest rates continue to decline, that's going to be beneficial for the US dollar. It's going to be a headwind for the Swedish crown. So this is a breakout here above 915 would certainly start to signal potential moves back towards the 10 level here in the 10 crowns to the US dollar. So regardless of whether you're trading equities, regardless of whether you're trading currencies, there are some views that we are hopefully helping you better understand with respect to, what's currently moving in the broader markets, and I think are worth paying attention to beyond just the equity markets, and also taking a look at some of the currency markets. So taking a look at the economic side of things, so we've seen a continued decline here for multiple months in manufacturing PMI. Manufacturing PMI in November declined a little bit further from the October numbers here. On the backside, services did improve here in November. So this counterbalances the two a little bit, speaks to the fact that the economic recovery is not in full swing, but there's still some weakness here on the manufacturing side. Continue to see strength here on the services side, which I would say buoys the economic recovery a little bit, but it doesn't quite, in my opinion, make up for the decline we've seen here in manufacturing. So when we look at the economic side of the picture, it's still a fairly mixed recovery. It's not a very strong recovery across the board. And that is probably weighing into some of the equity markets at the moment here right now. This lack of strong participation on the manufacturing side in conjunction with the services side. And remember, the services side is, it's a little choppy, but it is relatively flat here over the past 5 months or so. And perhaps we might see the December number come down a little bit because right now these numbers do not include the new variant here of COVID. So those are some things to consider as you're thinking about the equity markets and what your views are, in my opinion, for an investment. So taking a look at sector rotation, this is really where, when we look at the European markets, we don't see a strong amount of rotation. You certainly have energy that has been leading, continuing to see some declines, even though it's still in the leading quadrant, has continued to move here to the downside. You have basic materials and utilities that also have been in the leading quadrant that is starting to weaken into the weakening category here. You have consumer goods that is starting to show some strength here. That's really one of the few sectors that are showing some strength here, including healthcare. Industrials attempted to go into the leading category, but is now actually moving back into the weakening category. Telecom not moving in the right direction. Consumer cyclicals also not quite moving, is actually moving in this particular direction, so not moving in the right direction. Technology also not moving in the right direction. And financials attempting to improve, but not showing enough relative strength to get back into leading, will likely actually reverse back into lagging, especially with that interest rate in Europe and in Sweden hovering near zero. I'm not expecting financials to see a lot of strength here, unlike we're seeing in some of the other currencies where we do have higher rising interest rates. So when you look at sector rotation, there isn't actually any particular sectors that look great to the upside. There are quite a few sectors that look like they are continuing to weaken in this current market condition. So for the trade ideas that I want to take a look at here for today, I'm predominantly at the moment actually going to look at more bearish opportunities. Whether you want to look at bearish opportunities on the market itself, so if we look at OMX S30, there's two ways that you can take a look at this. You can either look at buying put options on the OMX S30 itself, and you can do it using a put option or a put spread. Those are the ways that I would consider hedging your portfolio. So for example, buying a February 2300 put would cost you 7,700 crowns, but if you bought the put spread, it would cost you only 5,275 in crowns. And I would certainly look at spreading this because of the significant reduction that you have in the cost of the trade, almost a third in terms of reduction of cost. And if we see that decline here, so let's just go back to the charts here. I was talking about a decline, a moderate decline to 2210 or so, 2210. If you bought the put option, as you can see here, you're looking at about a 16% return. If you bought the put spread, because of the significant reduction in capital and significant reduction in risk, you're amplifying your returns substantially using the put spread versus the put option. Now, if you do see a significant decline here below 2210, you might head down to maybe 2100 or so. But even then, as you can see here, you'll make a very nice 158% return versus a 279% return. So these two strategies, I think between the two, I would look at using a vertical spread to take advantage of the downside potential in the equity market. So for those of you that have answered yes, you're concerned about a pullback here, using a strategy like this may be a way to hedge your portfolio, especially if you want to remain invested in your portfolio and buying some downside protection. So as the markets drop, you have a little bit of cushion or a little bit of protection against the losses you have in your portfolio. And I'm actually going to show you how to paper trade this. So what we can do is we can actually save this trade by clicking, here, I'll show you, by clicking on this blue share button here on the right-hand side. When you click on the blue share button and then you click on the save link, which is this link here, when you save that link, what it does is it saves the trade in your portfolio. And this allows us to come back to this trade on our next session and see how these trades perform. If the markets pull back, we'll be able to see how this strategy performed. If it continues to rise, we will see how much money we lose. And this is something you can use to paper trade strategies in your account. And then you can go to your profile by going to your name in the right-hand corner, clicking on profile, and under shared trades, all of the trades that you created, the paper trades, will be there. So here is the OMX S30 index put option, put vertical that I just purchased. And when you click on the link, that will reconstruct this trade for you so that if you want to come back to an old trade that you paper traded, you can see those trades in your profile, and then you'll be able to even track the P&L. So here, because this trade was just opened, as you can see, the trade P&L is 0. But as you trade this going forward, when you come back tomorrow, the day after, the P&L will change based on the movements of the markets. So this is one great way that you can take what you've learned here today, especially if you're not quite ready to trade some of these strategies, to paper trade and follow along before you actually implement them into your own account. So with that, what I'll do is I'll bring up the watch list for some of the ideas I wanted to share with you here today. And there's a few that I want to take a look at here. AstraZeneca was one that I was taking a look at because, AstraZeneca has a very similar chart pattern to what I was showing you here in the equity markets. A very strong uptrend for a long period of time, and recently just broke that downtrend, that uptrend. And if we zoom in here a little bit, it's broken below some support levels here, and I think it can potentially target 950 here to the downside. So there's a few different ways that you can play this. You can look at buying a put option or buying a put spread. You can even look at selling a call spread. There's a lot of different ways that you can utilize options to potentially play for this type of upside. Potential downside. So there's no shortage of opportunities that you can use options play for. What I can even do is I can even paper trade all 3 strategies, selling a call spread. Let's do that actually, so that we can come back and look at these 3 strategies. So I'm going to look at selling a call spread. I'm going to look at buying just a simple put option. I'm going to save this. And then I will look at buying a put vertical spread. All 3 strategies are bear strategies here for AstraZeneca. And then we can come back, depending on whether AstraZeneca moves a little bit lower, a lot lower, or maybe just moves sideways, or maybe even continues to move higher. We'll be able to look at all 3 strategies and compare, where did we have the highest return? Where did we have the most risk? These are important information to understand about your strategies before you place a trade. So AstraZeneca is one that I was taking a look at because, as I said, when you look at that chart, a strong uptrend that has recently been broken in terms of uptrend. Another one similar to this is really kind of more of a, is not similar to this, but more of a range-bound stock. This is a stock that since late 2020 has made 0 progress. This was a 150 crown stock back in October of 2020. It is now 156 crown stock. So in a year, a little over a year, the stock has made 0 progress. And during this time, the markets have been continuing to move higher here. So relative to the market, this is a stock that has not actually been performing very well. So my expectation is that this might revisit this $143 level. So this is one that I'm actually also looking at some bearish trades here for STE. And you can, again, look at buying a put option, buying a put spread, using any of these strategies. It's a great starting point to help you first analyze this. And you can use the charts to say, okay, what if this stock revisits its prior support level around 143? Then when you type that in, you'll be able to see your potential returns on the particular trade. But also, I think what's important is, what if the stock trades back towards the top end of the range, which is 173? It's important to also understand your risks. So here, if I shorted the stock, I'm losing a 1670 in terms of losses. Here, I'm losing 950 crowns. Here, I'm risking only 790 crowns. So what I'm looking at is, how much risk am I willing to take? Which one has the lowest amount of risk? So this is really where I would prefer to only risk 790 crowns to make, my potential 150, let's see, sorry, 143 was my target, my 115% return. I'd rather risk 790 crowns to potentially make 910 versus risk 950 to make 750. So you see how that risk to reward ratio favors that strategy here to the right-hand side. If you understand that, please type 1 into the chat window. I want to risk the least amount of capital to try to make the highest return. And that strategy on the right will give me those based on the scenarios that I talked about, right? My risk is that the stock revisits its upside of the channel, and my reward is that it revisits the back end, the bottom end of the channel. And I want to make sure that what I can potentially lose versus what I can potentially make is favoring my outlook. And that's why the OptionsPlay score on the right-hand side is higher, because it gives me a better risk to reward ratio. So hopefully this kind of gives you some insights, not only into the strategies, but also how you might want to think about which strategy is best suited for you. And the OptionsPlay score is designed to hopefully help you implement this as well. So we'll save these 2 trades here as well, just to show you, these trades that you can go back and we will revisit on our next session, which will be in early January. And I know I'm taking a look at mostly bearish strategies here for today. The last one I'll do here is INDU, an industrial stock. As you can see, this stock peaked back here earlier this year. It has continued to underperform, attempted to rally here, and looks like it's continuing to move lower here back into the 260 zone or so. So if we look at some bearish opportunities here, if we think the stock might revisit 260, I'm risking 865 crowns to potentially make 1,135 crowns. That is a risk to reward that I'm pretty happy to take. And even risking 1,100 crowns to make 900 crowns is still a pretty good outcome if the stock does revisit that 260 level here or so. And my risk here to the upside is maybe it revisits 290 and potentially even 305. So let's just take a look at that as well. Here, I'm risking 1,100 crowns versus risking 865 crowns. I would, personally, I always try to skew my risk to reward as much as possible in my favor. And that's really how these option strategies allow you to do that. Again, when we'll save these 2 trades, the put vertical and the put spread, I know I'm looking at a lot of bearish opportunities here, but that's really informed based on my views here in the equity markets, what I'm seeing in terms of commodities, demand for commodities like gold and silver. We've seen gold and silver sell off significantly over the past few weeks. We've seen oil sell off significantly over the past few weeks. We see equity markets trade near major support levels. Interest rates are not particularly supportive. We look at the economic picture, the economic recovery is fairly mixed. So, I think the risks, in my opinion, are skewed to the downside, and that's informing why I'm taking a look at some more bearish opportunities and showing you how to potentially either protect your portfolio using an index like the OMX S30. This will provide broader broader protection for your portfolio if you are looking for that downside protection, or if you want to make some speculative bets on individual stocks that you think are going to decline in this type of market environment, you can do so using this OptionsPlay tool. And if you're brand new, I encourage you to paper trade these strategies. Again, click on the link button here on the upper right-hand corner of your screen to save your trades. And you can always go to your profile to look at your share trades and see how they have performed. So if you're brand new, this is the best way, in my opinion, to learn. So with that, that covers what I wanted to share with you here today. If any of the strategies that I spoke about here today is new to you and you've never learned them before and you're trying to learn more about these option strategies, you can take a look at our full course that's available free of charge to all Nordic private investors. Beginner, intermediate, and advanced courses are available to you free of charge at that link here on your screen. It's designed to help you get started regardless of where you are in your options education, whether you're a beginner and you're just learning what calls and puts are, or if you're advanced and you want to look at volatility and some of the more advanced strategies like credit spreads. Those are all available to you here at the trade.optionsplay.com/NordicEDU. And if anyone's here does not have access to OptionsPlay, this is the tool that I'm showing you here today. You can sign up completely free of charge at OptionsPlay.se. It will give you access to the platform. It will give you access to the weekly education webinars that I host, the cover call and short put opportunity scans that we publish every single day, and access to the full video library, the historical video library of all of the sessions that I have hosted since 2019. We have over 50 videos on different option strategies that I've covered since 2019. Those are all available to you if you sign up using OptionsPlay.se. So with that, that covers what I wanted to share with you here today. At this point, what I'll do is I'll open this up for Q&A for a few minutes. If you have any questions, you can type your questions into the Q&A section, and I'll try to answer as many questions before I sign off here. So there's a chat window in the Q&A section. You can type your questions in the Q&A section if you have any questions. Sigvard, your question about portfolio. Yes, that is something that we have functionality for. You know, we're still working with the brokerage firms to potentially get your portfolio data, but we are working on a way to manually enter your portfolio data into OptionsPlay so that you can manage them in OptionsPlay. That is something that we are working on for 2022. And Corinne, thank you so much. I appreciate it. You know, the next session will be back in January. So for those of you, we will not be able to reconvene before the holidays. I just want to say happy holidays to everyone and a happy new year. If I don't talk to you before then, I will see you in the new year. So if there are no other questions, I just want to thank everyone for taking the time out here this evening. I hope that this was helpful in helping you have a view and get yourself situated before the end of the holidays. Think about lightening up your positions a little bit. You tend to get a little bit more volatility around the holidays. Make sure that you have some protection, if you are concerned about the markets, especially if you're not going to be spending the time in front of the computer as you're with family. So with that, thank you so much. Have a great trading day, and I'll speak to you guys next year.